What we have in Aurora Innovation is a fascinating investment opportunity that I'm very excited to share my initial thoughts and research on. So they're an autonomous driving company specializing in trucking, and that's actually the sector that they doubled down on a few years ago and now solely focus on. And they are finally on the road. They have their safety drivers. They briefly removed their safety driver, and they've currently got it back for reasons unrelated to their full self-driving autonomy software stack. And they're making massive headway in an industry that is really desperate for some innovation. In their most recent letter to shareholders, after years of uncompromising commitment to safety, rigorous engineering, and disciplined execution, driverless trucks are now on the road operating commercially. Autonomous freight is no longer just a vision, it's a reality, and powered by the Aurora Driver. Now, what makes it an interesting investment opportunity compared to other stocks that I have discussed on this channel is that they're pre-revenue. And I very seldom invest in businesses pre-revenue. And just because it's pre-revenue, it adds a massive degree of risk that would probably never make Aurora a large holding of mine. They are just about to start breaking down revenue for the first time in Q2 of 2025. And they're at a 9 billion market cap, which is high considering no revenue. So that highlights the increased risk of investing in a company like Aurora. But two things. It's got technology that's years ahead of almost anybody else. So Aurora are in number one position for full self-driving for trucking, which is a ridiculous total addressable market. And I'll go through some of those thoughts and figures in a minute. Number two, the total addressable market, as I just mentioned, it's absolutely enormous. So they've got a technology that's years ahead of almost anyone else apart from another small company called Kodiak, which is small and private, and a ridiculous total addressable market. Aurora was founded in 2017 by what you may call a dream team. Chris Urmson, the ex-Google self-driving lead that then became Waymo just as he left. And that is now definitively, if we look at today's standards in terms of who is making revenue on the road from full self-driving, they are the definitive leader. And Chris Urmson headed up all of that research and innovation. Sterling Anderson, who worked for Tesla Autopilot, he was the head there. And also Drew Bagnall, who is ex-Uber ATG researcher. So you've got a dream team there. Sterling Anderson has since left, and Chris Urmson and Drew Bagnall are still there. Segueing Aurora from their research phase, now they're in their post-revenue stage on the way to commercialization. Chris Urmson has been obsessed with full self-driving almost his whole life. He's got a BSc in computer engineering from the University of Manitoba and a PhD in robotics, and his thesis was navigation regimes of off-road autonomy. Take a look at what Aurora are trying to do.
While there's a safety driver behind the wheel, these trucks are operating completely autonomously. They belong to Aurora, a self-driving technology company hoping to launch with no one in the cab by next year.
Today, if you want to take strawberries from California to Dallas, it takes about 3 days. With the Aurora Driver, you'll be able to do that in about 24 hours.
Self-driving trucks can see better, they can see further, they're not getting tired, they can operate 24/7.
That means that a truck that could normally do 450 or 500 miles a day could do 1,000 to 1,100 miles a day. That significantly increases the profitability of running that truck.
The introduction of autonomy in trucking could have a major impact on the industry.
Our economy runs on the trucking industry. As the industry says, if you bought it, a truck brought it.
And since Aurora are very, very far ahead, this is also key because autonomous driving is an absolute classic when it comes to a data advantage, right? The more data that Aurora's trucks collect, and they've been on the road collecting this data longer than anyone else, specifically for trucking, the more accurate the vehicles can get, which improves their safety, which improves their probability of them being approved by regulators. And of course, full self-driving has proven to be an incredibly complicated thing to do. You know, Google have been working on this since 2009, and they finally got cars in multiple cities with no safety drivers making revenue. Apple had to shut down their full self-driving division, or at least we haven't heard about it for a very long time. Tesla have been delayed by nearly a decade in actually getting their robotaxis on the road. So it's a very, very difficult industry. And the fact that Aurora is so technologically ahead in trucks, and they've got that data and they are continuously making their trucks safer and safer, gives it a massive advantage. The more data the Aurora trucks see, the more patterns it can learn, and the better that it can perform both in common and those unusual situations that you may get in trucking. So why trucking? Like why this industry for full autonomy? Well, one point is the market really needs it. There is a chronic shortage of truck drivers across the world, but especially in the West. The average age of a truck driver is getting older and older. And the estimates for the United States, which is the country that Aurora are initially focusing on, Texas and the southern part of the United States specifically, the shortage 10 years ago was around 40,000 drivers. Those drivers that were in the industry were old, they've now aged. Today the shortage is around 80,000, and by the end of a decade, if current trends continue, the shortage is estimated to be around 160,000. So there's a massive shortage of people that do this job. It's a very difficult job. You know, you're on the road for a very long time. You get paid by the mile, so you're not paid for a lot of other work, like just waiting around at depots for your stuff to be collected and dropped off on the truck. You know, long hours, isolating, awkward working hours as well. And also it's sedentary, right? It's a very unhealthy lifestyle, and the life expectancy of a truck driver is not that high. It's just very hard to eat clean when you're on the road at awkward times continuously, right? I don't see the most healthy food in service stations and truck stops. So there's a lot of people that don't want to do this job, which is fair enough. It's very monotonous as well because you spend all your time on the highway. And another thing, there is an 11-hour daily driving limit in the United States. And I think for most countries, this limit is actually lower. But in the United States, where Aurora is focusing on, there's an 11-hour daily driving limit. And what does that mean is that obviously it's there for safety reasons because humans get tired. You know, it takes a while for freight to be transported from A to B. And that's also significant because the number one type of product to be transported is food, because food needs to be transported continuously and we all consume a lot of food. So when you've got food, particularly fresh food, that has a finite shelf life, and the goods have a much higher value if they can reach their depot and when they can reach their destination with a much longer shelf life. So that is a massive one. Also, this should help with fuel economy as well. So just trucks going very consistent speeds. Also massive safety improvements, right? Trucks are massive vehicles. If trucks have a collision on the motorway, I mean, that can crush many cars and unfortunately kill a lot of people. It's even more serious than a car having a head-on collision with another car, obviously, because of the size of the vehicle. So as autonomous driving gets safer and safer, which it is, day by day by day, as we gather more data and the trucks are retrained on new data and can make better decisions, then it's actually going to save lives, which will also reduce congestion because there'll be less crashes on the road. And also, you know, these trucks can eventually drive 24 hours a day, which is the plan in the very near future. That's a big cost. And then because there's a shortage of drivers as well, obviously that's putting wage pressure up. So there's wage increases, right, in drivers. So it will save the industry a whole lot of money as we transition towards autonomy. So Aurora are getting closer and closer to this goal of actually commercializing autonomous trucks, and they are pretty much there. They are very, very close. And actually earlier this year, they had their 240-mile route from Dallas to Houston, which is a very important trucking route. Texas is one of the most busy states for trucks in the whole of the United States, open for commercial autonomous driving use. Now, there was an issue which spooked the market a little bit with Packer. Packer are the OEM that actually manufacture the truck and then partner with Aurora. So Aurora they've developed the software, obviously the mapping and the decision making. They've developed the hardware, so the cameras and the LiDAR that go on the trucks. But obviously they're not manufacturing trucks themselves. I think that would have been a very silly decision for them to do that. So they partner with Packer, and there was a fault in one of Paccar's, in the base truck platform that Packer manufacture. So it was a mechanical system, and Packer asked Aurora to put the safety driver back in the driving seat of that truck until they can get everything resolved. So it was nothing to do with the Aurora Driver software or autonomy stack, and Aurora hope to have that safety driver removed again in the very near future. The point is, Aurora are getting closer to what is a massive, massive total addressable market. And let's talk about that. So The global freight market in revenue is worth 4.5 to 5 trillion every year. The phrase is, if you bought it, a truck bought it. And I'm currently looking down around the room at all of these paintings and cameras and lights, and it's true. Everything is transported, particularly because we have an economy where you have large manufacturing factories in certain areas, and then you have the actual distribution, and then the wholesale and the retail is spread out over thousands of different locations across multiple countries. So it's a 4.5 to 5 trillion a year market, and most of that is trucking. So most of the freight market's trucking, and from long haul trucking, that's estimated to be over $1 trillion a year. So I've got $1 to $1.5 trillion a year for long haul trucking. And then the labor of that, again, the drivers, are nearly half of that total market share. So you can see where Aurora's total addressable market could be around $500 billion a year, because they're targeting the removal of that labor, which makes sense from an efficiency standpoint, from a safety standpoint, and from a cost standpoint. So very, very good. So it's a very exciting opportunity, but that obviously doesn't discount the fact that they are still pre-revenue, that it will take them a bit of time to scale. However, they've moved in the right direction with an absolutely phenomenal team. What they've been able to accomplish since they were founded in 2017 to actually get these trucks on the road is phenomenal. So we can see the upside is there. As I mentioned earlier, the market cap is currently 9 billion. I was just reading, let's say if they can capture, I talked about that 500 billion a year TAM for actually what Aurora are doing. That's global TAM. If they can capture 20% of that, they could be making 100 billion in revenue a year. Of course, we're talking decades down the line, but then if you price that at 5 times sales, which would be realistic, this will be a high margin business, right? It's highly operationally geared. The key advantage is in the hardware linking with the software and the ability of the truck to make the decisions. And obviously they own that AI. If you price that at 5 times sales, the market cap could be 500 billion. And that is a big could be. But we're talking very, very long term if things go well for Aurora. So that's the positive, but I also understand that we're looking at a company which has the tech and has the team, but they really need to prove themselves that they can transition from developing the tech to commercializing the tech and actually making revenue. So this is Aurora's share dilution over the past few quarters, and we can see that the annual share dilution has been about 13 to 14% a year, which isn't crazy given the expense of this business, but you can see just a few quarters ago that annual dilution was 32%. If we look at it on an annual basis, they diluted a little bit in 2022, and then up to 31% in 2023, and then 13%, and then 14% taken over the last 12-month period. So that's where they're currently at in dilution, which is understandable. And then when you look under the hood, so here we've got a few different metrics, right? We got total liabilities in orange, total current assets in purple, and then a couple of really important ones, cash from operations in dark blue. Obviously that's negative because Aurora are not generating any revenue and they've got significant expense. And you can also see the cash and cash equivalents going down quite steadily. And this is suggesting that with just 170 million of cash and cash equivalents in the last quarter, and 142 of basically cash from operations expenses, that Aurora may need to do more share issuing soon. They have said that in their Q1 2025 shareholder letter, the CFO, David Madej, I believe his name is, said that they ended the quarter in nearly 1.2 billion in cash and short-term investments. So if they count that as liquid-ish investments, that will give them the ability to survive 8 quarters or so, roughly. But that's still not a huge amount. And I think it's no secret that Aurora are planning to dilute. Now, management have reiterated their aim is to raise between 650 to 850 million in additional capital to support all operations until achieving positive cash flow targeted in 2028. So the midpoint of that, 750 million, is only 8-9% of current market cap, but I imagine that's an underestimate and they will need to do more than that, because you know what it's like. You set these optimistic targets I don't think they should be too optimistic, and I'm not necessarily saying that's a good thing, because when they don't hit it, then it can spook the market, but basically that's currently where they're at. One thing to think about is, let's say between now and profitability, Aurora need to double their share count, right? That's effectively, if they're a 9 billion market cap, in layman's terms, you're paying 18 billion effectively for valuation now before they then stop issuing more shares. If you think about Waymo, right? As I say, Chris Urmson was at Waymo. I mean, he is a massive, massive part of getting Waymo to where it is today. He was critical in the early stages, and he's replicated the same thing with Aurora, using his extremely high-end skill set. As of mid-2025, Waymo is estimated to carry a valuation of around 45 billion. And thinking about it, I reckon Aurora are roughly 3 to 5 years behind them, right? Because Aurora, they've just announced this route that hopefully they'll be removing that safety driver again within the next few months. Let me just reiterate, there's a Packard mechanical related fault. It's nothing to do with Aurora's autonomous technology at all. Yeah, so in 2020, Waymo just started commercializing robotaxis in Phoenix first and removing the safety driver. And now Aurora is commercializing autonomous trucking on the highways. So that suggests Aurora is about 5 years behind Waymo, and Waymo are currently at a 45 billion valuation. However, I think Aurora have the opportunity to scale faster, because Waymo are having to do very, very complicated mapping, move city by city. Aurora is primarily on interstate highways. So Aurora don't do full A to B. They'll be somewhere at the end of the highway where a person, at least this is for the moment, will then drive the truck to the depot. So because they're on highways, it's just easier to scale. There's less to worry about. There's less nuances. There's less difference between cities. So you could say, Aurora is maybe 3 years behind Waymo. So if the market is comfortable valuing Aurora the same that it values Waymo, then Aurora could have a shot at being a 45 billion valuation in the next 3, 4, maybe 5 years, which is very exciting. Here we can see Aurora's valuation timeline over time. So yeah, they were founded in 2017, got their Series A funding in 2018, and then 2.5 billion by 2019. By the time they went public, they were trading at 18 billion market cap. And now, 4 years later, when they have proven that they can do it, they're trading at half of that market cap. So that's a very good sign. I would say that relative to where they were trading at in venture capital, and of course these are all estimates, Aurora are trading at pretty good value relative to their past. And if they are able to get to Waymo's level of valuation within 3, 4, 5 years, that's a 5x from where they currently are, and probably a bit less because they're definitely going to need to issue a lot more shares. So it's clearly a very exciting proposition, isn't it? Being able to have trucks that are safer, more effective, and that are cheaper, and that basically they also have this massive, massive tailwind that the legacy trucking industry is very much struggling. The product roadmap, Aurora have reiterated that this is on track. So throughout 2025, they're going to increase driverless roads. They're also going to start at night, and then they're also going to start in more extreme weather conditions, so rain and heavy winds. And also they're going to expand this route from Fort Worth in Texas all the way to Phoenix in Arizona as we go towards the end of the year, which is very, very, very exciting, because if you look at this route, that is over 1,000 miles. Now, as I mentioned before, there's an 11-hour limit on how much a truck driver can drive per day, and rightly so. And the fact that this route will take at least 15 hours is significant value add for a company. And I'm assuming that there's a lot of fresh produce, which is only one tiny part of this use case, but there's probably a lot of fresh produce which is time sensitive that goes from this area of East Texas, which is much more arable, to obviously Phoenix, Arizona, which is much more in the desert and is less arable. So that's very, very interesting as well. Massive, massive use case there, and it's exciting that they are expanding on that route. Once they've done it, the delivery from A to B will be continuous, and therefore there's just ongoing revenue as Aurora can replicate this route. Okay, so a few little things which could be negatives for Aurora, and it's worth mentioning because you notice if you look at the share price has come down quite a lot from recent highs, even though Aurora have now proven what they can do and are starting to commercialize their service. So Dara, I'm not going to pronounce his second name, who is the CEO of Uber, he left Aurora's board in late 2024. Aurora have a big partnership with Uber and also a massive investment, and Uber are now raising some money that they are borrowing against those shares in Aurora. So when Uber are repaying, it could potentially lead to the selling of those Aurora shares and Uber exiting a part of their stake. So that's not good. And it doesn't necessarily mean that it is something that Uber does not like in Aurora. It could just be that Uber are very much focusing on their core operations, and there are many, many reasons for this, but of course, you do think in your head. And also Sterling Anderson, that's one of the founders, who was head of Tesla Autopilot before Aurora, he's just left the company as well to go and work at an alternative opportunity in electric vehicles at General Motors. Again, it doesn't necessarily mean that it's a bad thing. Of course, Chris Urmson left Waymo in 2016, and look at where Waymo is today. People leave for many different reasons, but that is just something to note that has spooked the market a little bit, in tandem with Aurora having to temporarily reintroduce the safety driver, which in my eyes is not an issue at all, because it's nothing to do with Aurora's core software. And I've listened to many podcasts with Chris Urmson, and he is just so focused on safety first, like 100%. And it's showing that Aurora care about the long-term value of their brand and the long-term value of their tech. They do not want to be misbranded or have any kind of collision. And that's a point, actually. Aurora have had absolutely no collisions or no incidents at all that have been their fault. So they are very much like step by step, let's get the technology absolutely accurate first and then open it up. So they're not in a rush to, if Packard that manufacture the trucks say, there's some small defect, we just want to put the safety driver back in. Aurora are not going to risk damaging their long-term brand for the sake of speed of a few months. Aurora are playing the long game. Something else to think about, because again, I'll reiterate, I've never done a video that is of a company pre-revenue. So something else to just really think about. There are many companies that have failed that are pre-revenue. One massive example is Virgin Galactic. That's a very prominent example I can think about that used to be a company that was worth billions and billions of dollars. I'm not entirely sure what it's worth now. Yeah, 129 million in market cap. That's all that's left of Virgin Galactic, having lost literally over 99% of its value since their launch. So given that they are actually quite similar, and Virgin Galactic's pre-revenue expenses are much, much higher than Aurora's, but Aurora still has a lot of expense pre-revenue and is not going to be profitable in the next couple of years. How do Aurora avoid having a Virgin Galactic moment? Well, obviously the worst thing would be if somebody gets seriously hurt by an autonomous semi-truck. Then that would be Aurora done and dusted, obviously. So that is something that Aurora needs to be very careful about. And I like the fact that they're on the cautious side. They're slow, steady approach, step by step, tracking safety with a lot of caution. So that's super duper. And then also they've launched a revenue generating route as well. So it's showing confidence to the investors that this can be commercial. One thing to bear in mind is the co-CEOs that are left, or Chris Urmson and his partner, they are very much on the engineering side, amazing at developing product. They now need to demonstrate for the first time that they have the skills to lead this into commercialization. So there's a whole different skill set. Now they've got the tech, they need to show the revenue can scale and the routes can scale, and they're good at doing that side. But I would argue what they've achieved in the last 8 years is much more difficult than the objective they've got going forward, right? And if anybody's gonna take care of the company like their baby, it's gonna be them. So they just need to avoid over-promising to the market and remaining in this demo mode for too long. I love the fact that it looks like they're expanding to this over 1,000 mile route between Texas and Arizona that has those significant use cases to the market, because it's just very, very inefficient and quite frankly, to a lesser extent, dangerous, but Aurora are much safer now than human truck drivers to do this massive 15-hour drive and there's significant value add for Aurora to do it. So that's just one thing to think about as well. And the longer that Aurora goes on, the more data they have, then they can retrain and fine tune their AI models to drive these trucks safer and safer. And then it's basically just a massive positive spiral from there. And I mean, who are really the competition? As I said, they've got Kodiak, but they're years ahead of anybody else. Tesla, if they wanted to segue into autonomous trucking, it's a whole different ballgame, right? It would take Tesla significant time and energy, and Tesla won't like Aurora anyway because Aurora used LiDAR. So that's something else to think about. So to sum up on Aurora, these guys have market-leading tech, which is extremely impressive, years ahead of the competition in a market which globally is literally worth trillions of dollars. And if Aurora captured 20% of this, their TAM at 20% market share of the global industry, just of removing the safety driver in long-haul trucking, their TAM could be 100 billion a year, 5 times sales. And of course, when they've only captured 20% of it, they can still be growing. So 5 times sales is very appropriate. Their market cap could be 500 billion. That's the opportunity. I'm not saying they'll get there. Obviously, 500 billion is a 50x from where they're currently at. They're currently at 9 billion in market cap and are just about to break down revenue. Waymo are probably 3 to 4 years out or ahead of where Aurora are currently at. Again, Aurora and Waymo are not competing because Waymo are doing robo-taxis and Aurora are doing trucking. So completely like different industries that don't really have much crossover. Yeah, so Waymo are a few years ahead, and their market cap is estimated to be around about 45 billion. Obviously, Waymo are private and wholly owned by Alphabet, so that is an estimate as well. So that's something to think about as well. And yeah, it's a very high risk bet looking at these kind of companies, particularly something can negatively spook the market. The company does not really trade off valuation, it trades off sentiment. And if anyone is to make an investment in this company, they really need to believe in the autonomous race, the value that it creates, and also the people running the company at Aurora. So those are my initial thoughts. I'll probably do another video on Aurora very soon. Any questions you have, post them in the comments, and I look forward to seeing you in the next video.